right. Let me just know in the chat if you all can hear me. We're just going to do the audio check just to make sure I don't do the introduction with no audio. So just give me a thumbs up in the chat if you all can hear me, and we will get started. All right, it looks like we're all good. Well, good evening, everybody, and welcome back to Walks in Wall Street. Today is November 4th, 2023. It's about 9:13 p.m. here in New York City. We are officially back from South Florida. I spent about 2 days, 48 hours, in Miami. Had to take care of some things. Got some time to enjoy the beautiful weather down there. And it was about 78 degrees almost every day, right, for the 2 days I was down there, and a light breeze. So this is really the peak season in South Florida. But one thing I have noticed is the following. When I arrived in Miami and I was, cruising around Collins Avenue, Mid Beach, up to, North Beach and the like, there was a lot of Canadian license plates already, and it's only the 1st of November, right, when I was down there. Usually you have a lot of the snowbirds arrive to South Florida right after the holidays, and it seems to me, at least, quickly eyeballing it seems as if the snowbirds are arriving earlier and earlier every year. It was pretty packed when I was down there, so a lot of license plates from Ottawa, Quebec, and the like. So it was cool to see sort of that migration trend. Anyway, we do have some things to talk about tonight. Obviously, on Saturday, for those of you who are new here, we really don't talk about the financial markets. We walk around the city, kind of just chill. It's sort of our day off. But I think it's appropriate to cover a few things, mainly because we missed the live stream for the last 2 days, and we had major pieces of the economic news and major events that happened on Wall Street. First and foremost, everybody, we did hear from the Federal Reserve at the conclusion of the Federal Open Market Committee meeting, the FOMC meeting, unchanged. Interest rates will remain unchanged. The Fed funds target rate remains in a range of 5.25% to 5.5%, and I was wrong, actually. I thought the Fed was going to maintain interest rates and not hike and pause, which they did, but I thought the Fed chair was going to be a little bit more hawkish, and I thought his speech came off as a little bit of a dove. I wouldn't say fully dovish, but a little bit more dovish than I would have expected, and we really saw that action, the reaction in the market, particularly as you look at the yield curve. Massive, major movements in the bond market. We'll quickly go through that. If you type in cnbc.com/bonds, once again, cnbc.com/bonds, take a look at the yield curve for yourself. Right now we have a 10-year at 4.5%. Just 2 weeks ago, we were talking about a 10-year at 5%. So yields have come down across the curve, and what I believe we're going to do on Monday night's live stream is do a deep dive into yield curve analysis. Now, we've done this before, and I think many of you understand how to interpret a yield curve in the appropriate way, but I think it's very important, particularly as we're seeing this transition in the yield curve, to really understand what it means. Right? How do we interpret the yield curve in the appropriate way? Is the curve going from an inverted curve to a flat curve to a steep curve, or from a steep curve to a flat curve to an inverted? It's not necessarily important to understand where the yield curve is right now, but the way I was taught is it's most important to understand where the curve is coming from and where it's transitioning to. And from that, we can really understand what the market is predicting about the outlook on the economy for the next 6 to 12 months. So stay tuned for that live stream that will be on Monday, where we will do an in-depth dive on yield curve analysis. Also, on Thursday, I will be emailing everybody the Behind the Street newsletter, where I will be including one of my financial models that I've built, or one of the models I've built, where you can update it yourself. So I'll leave the Excel spreadsheet available to be edited, and you can have a visual of the yield curve in transition, right? And I think it's important as any investor, trader, even market participant, or even if you own a small business, or even if you're a CEO of a major company, it's important to understand the debt market, where it's going, and where it's come from. So again, just in recap, yields came down massively. If you look at the 30-year all the way out on the longer end of the curve, 4.77%. The 20-year, 4.9%. And again, that 10-year U.S. Treasury, which is the benchmark, 4.5%. So yields have come down quite significantly. And on Monday, we'll talk about what that means, okay? So Apple reported earnings. There was a little bit of mixed messaging on Wall Street. I should say mixed feelings on Wall Street, whether it was a good report, a bad report, a horrible report, or a stellar report. I'll give you my take. I think it was good. I thought Apple reported a very good quarter. Now, yes, I understand, and I know, and we're probably going to talk about this tonight. Look, sales did fall, so overall sales have declined for now 4 straight quarters in a row. I get that, I understand that, but digging a little bit deeper into the report, there are some very, very bright spots. Now, I want to turn everybody's attention. Sorry, I didn't program this into the Nightbot, but if you just go to apple.com/investor relations, once again, apple.com, and go to the investor relations page, you can look at all the filings, and I'd like you to go to the presentation. And again, that's free to get on the investor relations page. You'll notice that the biggest sales decline was from the Mac and the MacBook section. Right, so Apple breaks down their sales by iPhone, Mac, iPad, services, and the like. And Mac sales bombed in a pretty big way. Wall Street was expecting $8.63 billion in sales for Mac. It came in at about $7.61 billion, so it missed pretty big there. But take a look at services. Coming in at $22.31 billion, Wall Street was expecting $21 billion. So the service sector, and that includes iCloud, that includes the App Store, that includes Apple Music, and all of those sort of subscription services is doing really well, and it's growing, and obviously services tend to have higher margins. But I'd like to note specifically one of the main reasons why I believe Mac and computer sales really have cratered. If you look from 2021 and 2022, at least from my experience, right, and this is up for debate, there was a massive amount of pull forward, specifically as it relates to Chromebooks, computers, laptops, and Macs across the board, right, not just at Apple. And this is because you had massive amounts of stimulus and grant money going to state and local government and education, and they were putting in massive amount of orders for laptops, connected devices, hotspots, you name it, to sort of bridge that digital divide during COVID. So a lot of these school boards already have the laptops, the Chromebooks, and the connected laptops that they need. And I've always said that that was probably about 3 years of tech spend at the state, local, and municipal level pulled into 1 year. So if I had to make a prediction, this doesn't mean I'm right, okay? It doesn't mean what I'm saying is correct. This is just what I'm seeing, because back during the COVID days, I used to work on these deals. I did some of these, some of the largest, connected laptop deals in the country. I did at the MSP that I was working for. So I think over the next 2 years, you're going to see normalization in spending for connected laptops, MacBooks, Chromebooks, and again, I know I keep saying Chromebooks, but I'm trying to sort of paint the picture for what specific tech product was pulled forward so much, right? So look, overall, iPad revenue beat, services revenue beat, iPhone revenue beat. The only category that missed, and it bombed in a big way, was Mac. I think that's probably one of the reasons why. Now, not to comb over that Apple sales did decline for 4 straight quarters in a row. I don't think that's a massive, massive cause for concern. If you look at Wall Street estimates for EPS, beat on both the top and the bottom line. Coming in at $1.46 on EPS, Wall Street was expecting $1.39. Revenue, Apple reported $89.5 billion. Wall Street analysts were expecting $89.2 billion. So beating across the board on all metrics. In addition, last thing I'll say before we get started here, look at gross margins. gross margins expanded, and not only that, it also beat Wall Street expectations for margin expansion, coming in at 45.2% for gross margin, and analysts on Wall Street were expecting 44.5% for gross margin. I'm going to go ahead and get started. If you guys scan the QR code on your screen, you will be signed up to receive all of our equity research for free. So every other Thursday after the market closes, right around 6 p.m., I email all of our Walks and Wall Street subscribers all of my research that I've done, deep dives on companies, deep dives on specific sectors, what I'm seeing in the market from both a global macro standpoint, U.S. equities, global equities, fixed income, and real estate, both residential and commercial. If you want to receive that and read it for free, go ahead and scan the QR code on your screen, punch in your email, and you can receive all of our archived work, again, for free, or you could type !news, N-E-W-S, in the chat, and the Nightbot will drop the link to the newsletter. I think it's really good information. We're trying to improve it every single week. And coming down the pike, starting in December, we are going to include interviews with very notable hedge fund managers, bankers, and also big top real estate brokers, both on the commercial real estate side and the residential real estate side. So you don't want to miss that. I have some really big interviews coming up, and I think you guys are probably going to be pretty surprised with some of the names I was able to get. So I'm going to go ahead and close up the laptop. I'm going to say hello to everybody in the chat, but first and foremost, I want to wish all of you a very wonderful weekend. And we'll get started in just a minute. So bear with me one second. All right, let me clip the microphone on here and we will get started. Now, we are reporting live right here, my friends, at 432 Park Avenue. Check this out. We're back in New York, and it's always a pleasure to see one of the most interesting architectural marvels of the city, which is right here at 432 Park. We are currently standing right on 56th Street. And today we are going to be walking down Central Park South, going over to 59th Street, Columbus Circle, and then headed downtown. And I think you'll enjoy what the city has to offer tonight. So Western Mass Dave, it's good to see you. Stephanie R, welcome. What's going on? Let me get this out of the way for you guys. Who else we have? Valor Rabbit, Juan Fernandez, good to see you. What's up, Juan? Hopefully you're having a good Saturday. It's a little chilly in the city, but not too freezing. So I think we'll get a couple good streams in before it gets freezing. Hey, the FDNY, the Papa Smurf OG is here. It's good to see you. 425 Park Avenue, which is one of the newest Class A office towers in New York City. This thing is amazing. I see Sally is here. Willy Wonka, what's up? Did you see that weekly candle on ES or the SPY? Yeah, I did. Now, I wrote about this in the last newsletter about a week and a half ago. And one of the things that I look at specifically to gauge market breadth is the percentage of stocks trading above the 200-day moving average. And we were at extreme levels, like extreme negative bearish levels of stocks trading above their 200-day moving average. Now, according to 2 weeks ago when I sent out the newsletter, there was only about 17% of stocks trading above its 200-day moving average, and that usually signals at least some sort of an intermediate term bottom, right? Because you have extreme extension to the downside in a lot of these stocks with elevated short interest. So when you have that selling pressure subside, and when you have a lot of funds on the street that made a lot of money, that made a fortune, shorting this market, when they start to cover, you can have these very ferocious, face-ripping rallies. And that's exactly what we saw this week. Now, notice on those rallies, almost every single day you had a lot of gapping action. So you had the market gapping up almost every day. And usually those gaps do get filled. But, September is usually the worst month for stocks. We've gotten through that. Now we are well on our way into November, and we've had the vast majority of big companies in the S&P report earnings. And I thought, for the sentiment of the market and due to the circumstances we're in, I thought earnings were all right. I don't think it was the doom and gloom that a lot of people make it out to seem. For the environment we're in, for the companies that reported so far, I give it like a B. I give it like a B if I had to give it a score. So, hey, Rick F is here. Says, hey Tom, good evening. Interesting topic. What do you think is one of the possible solutions to the terrific inflation in Argentina? I'd love to know your opinions. Greetings. Yeah, I mean, it's wild, right? If we think, and that's something I think about a lot, and this is something we actually talk about a lot on the stream. We complain in the United States about how we have, 3.5% inflation, right, for our CPI. In some places around the world, particularly Argentina, I mean, wow, they have over 150% inflation. And I think, in my opinion, and I think all of you pretty much know what I'm going to say already, endless money printing and the sort of the fiat system is designed, right, by design, to erode wealth. It's sort of like a never-ending sort of rat wheel in the fiat monetary system, which essentially almost makes it impossible to save physical cash, right? It almost forces the investment immediately of that cash. But now that rates are going up, investors could actually make a real rate of return on their money. But you look at any single country that doesn't have the luxury that the United States does of having the world reserve currency. Almost all of them have very, very high inflation rates, except, a select handful that have very strong and robust economies. So if you have a very, very weak economy and you have insane amounts of money printing, well, it's a recipe for inflationary disaster, which kind of sucks. So the question is, do we go on a gold standard? Do we go back to that? Do we have some sort of a gold-backed digital central bank currency? I don't know. Who would be for that? That's an interesting question. Who would be for or against sort of like a gold-backed digital currency? I don't know. Matthew M says that's why I like precious metals. Well, gold is at what now? Almost $2,000, probably a little over $2,000 an ounce. We've had a big rally in gold after the crazy turmoil that's going on in the Middle East. Hey, Cosmo Scaria, what's up? This is Peter Schiff would be for it. I'm sure he would. Yeah, Peter Schiff is what I like to call a perma-bear on equities, but a perma-bull on gold. Now, gold is looking really good, though. If you look at a monthly chart of gold, if you pull up your, Bloomberg Terminal, MarketSmith, really whatever you use for your charting software, a monthly time frame, actually to the Japanese stock market. If you look at a monthly time frame of the Japanese indice, I'm just trying to avoid these. There's like these big plates of mud here. What was I saying? Oh yeah, anyway. Guys, this is something you need to check out. Check out a monthly time frame of the Japanese equity indices. Now remember, it topped in the 1980s, and we have not yet reached a new all-time record high in Japan since the 1980s, guys. But we are slowly but surely making our way back to all-time highs, and this is the biggest base I've ever seen in my entire life that's going on in Japan right now. And if you watch the most recent interview with Larry Fink, who's the CEO of BlackRock, Larry Fink is saying that from all of his world travels, he is seeing the most direct investment interest in Japan right now. Is it a coincidence? Probably not. So I will tell you this. I will be long Japan in a big way if we crack into new highs on the indice. I will be very long Japan. So this is the LVMH Louis Vuitton, and they already have the holiday Christmas windows up already. And it's only November, 4th? And they already have all of the holiday displays up. You guys think this is a little bit too early, or no? You think it's just right? Jack Daniels says, is work being done again on Tiffany? I thought 100 million was just done for the refurb. I don't know. I think they're redoing the sidewalks. They're putting some like recessed lighting or something on the sidewalks there, but you're right. They did about a $500 million renovation on the Tiffany at 5th Avenue. And about 2 weeks into the grand opening, unfortunately, the place caught fire. There was a big fire in the basement. Thank God nobody was injured, but that caused a lot of damage. I believe it was an electrical fire in the basement too. Yeah, everybody in the chat saying it's a little bit too early. Go for Hokies is like, maybe, no, it's not too early. Edison, what's up? So what's up, Tom? I'm doing pretty good. Thanks so much. Lee says better to bring back the gold standard than rely on the full faith and credit. Now, I don't disagree. I definitely don't disagree. Inflation, I always say inflation is theft. It's sort of how I describe it. Hey, Tony's here. What's up? Hey, FredX, dude. We were worried about you, man. The team was worried about you. We were like, where the heck is FredX? It's good to see you. Thank God you're safe and all well. I think very fitting for tonight, since we were talking a little bit about Apple's earnings. We are here at the main flagship Apple store at 5th Avenue. Now, here's the thing, though, right? In this earnings report that just came about 2 days ago for Apple, we only have 1 week of sales data for the iPhone 15. So there was an analyst, I forget what bank he was from. He came on the call and he was asking some probing questions to Tim Cook about preliminary iPhone 15 sales. And according to Tim Cook, so far, if you compare the first week of iPhone 15 sales to the first week of iPhone 14, the iPhone 15 launch, according to Tim Cook, has been significantly better. Significantly better. Which I could totally believe, because this is the first time I've ever seen people lining up to buy the iPhone. This is the first time. I've never seen it before. There was lines all the way down 5th Avenue, wrapping around to Madison, for people lined up to buy the iPhone 15. So I wouldn't be surprised if next earnings report we see some big numbers. We'll see. Anybody get the iPhone 15? Madison 32 is here. What's up? RB says earlier decorations translates to retailers needing to pick up in sales. I mean, you're definitely not incorrect. It seems as if every year we have holiday decorations coming out earlier and earlier and earlier. DLSX says sales in China are lagging because China is pushing Huawei phones. You're right. You were absolutely right about that. Now, I believe China is Apple's third largest market. And what includes China sales is also Hong Kong and Taiwan. And you're 100% correct. And I believe that was a question that was brought up on the call about, is this a major risk? Now, sales didn't decline in the China market, but they were pretty stagnant. To use your term, very laggard. Sales were flat at about $15 billion. Exactly in line with what it was last year. Now, as you think China is a massive, massive economy, you would think you would get some growth there, but no cigar, no shot. That is one thing I'm a tad bit worried about, because there was some news about what is the rule now, everybody, in China? If you are a government employee, you are no longer allowed to use Apple products. You have to use Huawei phones. I don't know. We are now at Central Park South, the easternmost side of Central Park, and you see the Sherry Netherland Hotel, which is right here. We always talk about Sherry Netherland due to Jesse Livermore, reminiscences of a stock operator. Running at altitude is here. This is first year I did not upgrade the iPhone. Innovation is lacking. Yeah, if you have an iPhone 14, I definitely don't see a reason why you would need to upgrade to a 15, right? Now, supposedly, I was reading some articles on CNET, which is like a tech website. This is 432 Park Avenue, and this is the Trump Tower. So anyway, I was reading some articles on CNET, and they said that this upgrade cycle is one of the largest ones, because you're going to see a lot of people who had iPhone 8s doing a mass upgrade to the 15. Now also, and I could be mistaken, but I don't think I am, iPhone 7s no longer work on network in the US anymore. Is that right? I think about a year and a half ago they were already phasing that out. I don't think the cell bands or the radio bands in the cell phone work on our networks anymore. So I think you're forced to upgrade if you have an iPhone 7. I don't even think it works. Hey, Jafet Perez, the Apple Watch has been improved. Justin S. Tom Google announced they are supporting their Pixel phones for 7 years now.
Hey! He looks much older than you.
This is the residences side. You can see they're putting up all the barricades for the marathon tomorrow. We have the New York City Marathon. This place is going to be crazy packed. So do not try to drive on the island of Manhattan tomorrow. And I would really just avoid public transportation until about 4 o'clock p.m. It's going to be crazy busy. Just for fun, I was looking at some hotel rates. For example, this hotel right in front of us, according to American Express's website, it's $3,000 a night for a night at the Trump International Hotel. If you go to the American Express travel website and you look up Trump International, it's $3,000 a night. Hey, Cosmos says, I was wondering why the city felt so busy today. Yeah, big marathon week. You can see a lot of tourists. And I think all of these hotels are running like specials where I think they have the night before, which is tonight, they'll have like a pasta dinner, and then in the morning they'll have a big breakfast. So there's a lot of stuff going on. It's going to be really, really busy. I'm sure all of the restaurants on the Upper West Side for brunch, particularly after the marathon, oh my gosh, good luck getting a seat. Now, I'm going to be in Brooklyn tomorrow, so man, it's going to be all day. It's going to take me all day to get back to the city. I have to be in Red Hook. So from 2 to 4, I'm going to be in Red Hook, Brooklyn, from 2 o'clock to 4 o'clock. but it's probably going to take me like 3 hours to get back to Manhattan. Wow, Harper says, hey Tom, my iPhone 6 still works fine. Really? Maybe that was just on T-Mobile. I don't know. Hey, Western Mass Dave, what's up? Says, hey Tom, you have a busy day tomorrow? I do. It's mainly going to be busy just due to the tedious traveling, I should say. But you know what I do notice? You notice the pedestrian traffic here is very slow for a Saturday night. And I think that's because everybody is resting up to run the marathon tomorrow. You guys notice that? There's very, very few foot traffic tonight. Edward Adams, you are correct. I think they have to pay something like $2 billion for that too. Wow, Roz999 says, I ran the New York City Marathon before the pandemic and it was a great experience. I've never ran the New York City Marathon. I'm sure it was an amazing experience. I did volunteer though once. When I was in college, our soccer team, a lot of like the CUNY athletics, will pass out like the waters, and we were stationed right as you walk, well, right as you run over the right over the Verrazano Bridge. But yeah, that's a big accomplishment running the New York City Marathon, because you have to qualify for it too, right? I think you need to run. How does it work? You have to run a couple races, qualify with a good time, and then you can get selected for the New York City Marathon. So it's pretty cool. Hey, Dan says, I tried to sign up for the New York City Marathon but couldn't get a slot anymore. But I will be running the Queens Marathon at Flushing Meadow Park on November 19th. I've been training for a long time. Wow, well, good luck. Yeah, running a marathon is no easy task. No easy task at all. 26.2 miles. All right, this is 58th Street. Here we have a really, really nice shot of two of my favorite buildings on Billionaires Row. You have 157 and you have Central Park Tower. Now, do you guys remember when I told you I was invited to the broker open house for the entire 83rd floor residence at 157 about 2 weeks ago? I showed you guys some amazing video and photos of that. Well, it just went live. The listing just went live yesterday, I think, Friday night. So if you want to see it, check it out. Go to Street Easy, look at the building 157, and then look at the listing of the 83rd floor. It's the entire floor. It's over 6,500 square feet. It's unbelievable. The pictures do not do it justice, but you got to look at this thing. It is by far the most amazing apartment I've ever been in. And the broker who's listing it is Noble Black, who actually works on our floor, by the way. So we are both on the 6th floor at 575 Madison Avenue. He's one of the most successful real estate brokers in all of New York City. Hopefully they'll have some video up soon. I used to live right on the corner at 106 Central Park South. This block is beautiful, but you have way too much scaffolding up, which sucks. Hey, Chris says, we work bankruptcy and its effect on already troubled CRE market. I think it spells more trouble. Thank you so much, Chris Tompkins, for your very kind and generous donation. And I think I agree with you. I think I agree. Many market participants are sort of overlooking the potential. Oh, look at this. All of these cellos and violins. Well, here's the thing. and this will be some homework, look up the amount of square footage that WeWork leases. So that's homework assignment number 1. Look up the total amount of square footage that is leased by WeWork. And then look at the total, out of all the major CRE companies that own a lot of this commercial real estate office, notice how many of them, in hindsight, made the mistake of making WeWork an anchor tenant. Now, as we've been talking about on the streams for a long time, you have a really, really tough environment for commercial real estate, particularly office, right? Particularly office in major cities like San Francisco, New York, and the like, because vacancy is very, very high, and you're going to have a lot of this commercial paper roll over at much, much higher interest rates. So you have a dichotomy now of higher operating costs and declining rent rolls. And you're going to have even more declines on the rent rolls now due to WeWork going bankrupt. So look at the entire amount of square footage that WeWork leases. So could this be like a major, blow to a lot of big real estate operators? And I actually wrote a piece on this. If you want to read it, you could scan the QR code right here as we look at this beautiful building, which is called Alwyn Court. But I wrote a piece on this about 4 weeks ago now, detailing the coming struggles with commercial debt. I've listed out the exact amount of commercial paper that's going to roll over, which company is going to be most vulnerable, and I think it's a very important topic of discussion. So if you want to check that out, if you scan the QR code and punch in your email, you could read it for free, and every other Thursday after the market closes, you can read all of our research for free, or you could type !news, NEWS, in the chat, and the Nightbot will drop the link to the Behind the Street newsletter. But we covered that in depth. So Chris, I think it's a great question, and this could be an additional needle that pokes the commercial real estate bubble, if you will. Now from this angle, this is a really, really cool shot of the Steinway Tower. Look at that. It is the skinniest residential apartment building in the entire world right there. Absolutely stunning. Hey, Hawaii, what's up? Guys, check out this view of Central Park Tower. Look at this. Isn't that a cool angle? This is a pretty good shot of Central Park Tower as well as 220 Central Park South. I mean, imagine the views from some of those apartments, especially at night. Insane. Hawaii says, do they have units at the very top? Yeah, Steinway they do. Look at this mini yellow piano here. Someone says, I wish we had a Wegmans. I went to Wegmans today, actually, for the first time at Astor Place. I give it 2 thumbs up. I think it's really, really good. They have a huge selection of prepared food, a huge selection. And it was really good. It was a bit pricey, though. Probably just because it's in Manhattan. It's expensive, right? If you get some stuff out of the hot food bar, it's expensive. I walked out of there, just getting a regular meal, it was like $27. Hey, Tony says, Tom, do you think they will sell the penthouse apartment at 1 Central Park, or do you mean Central Park Tower, for the price they're asking? Well, they've significantly cut that price, by the way. It was originally listed for $250 million. I've said it wasn't going to sell for $250 million, and they've slashed it almost in half. Now, look, I have mixed feelings about this, and I think I've voiced this concern before about why it's not selling. And I have a few theories. But first, isn't this the new, we always see this Porsche parked either on Central Park South or right here. I think this is the new EV Porsche. This thing looks amazing here. I like the look of it, and I think that's the new EV. But anyway, I think on a bespoke product like that, in my opinion, right, in my humble opinion, I think it was over-marketed. Now, I know marketing, you're supposed to go really, really, really hard on marketing. I get that, and that's true. But for a product like that, like a one-of-one, $250 million, property at the top, the triplex of Central Park Tower, that's something that there's about maybe 100 families in the entire world that can realistically buy that, right? So knowing that your audience is probably 100 people, I think, and again, this is just my opinion, I believe going way too hard on a lot of the marketing there cheapened the product a little bit. I think so, right? And I'm not saying anybody did anything wrong. Like, Ryan Serhant is the best real estate sales guy on the planet, right? He's sold more real estate than just about anybody, and he's more successful than just about anybody. But if I had to give a little piece of advice on that, I just think, if you're pricing it at $250 million, you have to market it as a very secretive $250 million property, not have everybody in there in the world. Right? I think, if you look at some of these property tours of the triplex on top of Central Park Tower, it's stunning. They're so well done. It's amazing. I watched them myself. But I think for a product like that, I don't think you should have allowed so many of those videos to be taken, because you want it to be like a rare jewel, a very, very bespoke product, right? You don't want everybody to be in there. It's like you're going to spend $250 million on the property. You want it to be like super secretive. Maybe I'm wrong. I don't know. That's just the way I would have. That's the way I would have sort of done it. Like, you have to add a little bit of mysteriousness to it, in a way. So we're looking at the Trump International Hotel and Tower right in front of us. This is 1 Central Park West. Hey, Eric says, I heard they converted the Woolworths building dome into a luxury penthouse. Indeed they did. Spider Blaze says, why are you always ignoring me? Well, there's probably about 500 people in the chat, and I'm doing my best to read everybody's comments. Mike C says, I saw an ad for a 2022 Jeep Wrangler with 10,000 miles on it, and it was $80,000. For a Jeep Wrangler? I'm not too familiar with vehicles, but I don't know. Is that how much they go for Jeeps? Combat Jones says, are rents dropping across New York City? They are, yeah. The rental market is softening in a big way, actually. And I believe it's going to continue to soften a little bit. And sales. I think sales prices will continue to soften as well, also in a big way. And look, that's just a normal market cycle, right? We've talked about that before. We've talked about this multiple times. At the turn of a business cycle, when you have interest rates go up, the most liquid assets are the assets that reprice first, like equities, stocks, things like that. The less liquid, or I should say the more illiquid an asset class is, the longer it takes for it to reprice. So what we've been seeing is interest rates going higher and transactions or deal flow declining. or decelerating quite rapidly. The last step in the process is for prices to soften and prices to come down to match buyers with sellers at an appropriate price. Because right now the average 30-year fixed rate mortgage is probably 7.5%. It's come down from 8%. But deal flow is not getting done. There's not a lot of deal flow getting done at all. So I think the good news for buyers is that I believe prices are going to continue to come down and soften here a little bit. And rents should come down and soften a little bit, which is good. I don't know, what do you guys think about that? This is another good shot of 220 Central Park South as well as Central Park Tower. Hey, Florida's here. It says, hello, Tom. Greetings from Pompano Beach, Florida. I hope the value of my condo keeps going up. They sell fast where I live. Yeah, I mean, South Florida is really, really exploded. But I think South Florida will soften. You know, that's just how the business cycle works. I mean, you have this euphoria. I think it was really euphoria what was going on in 2021 with these bidding wars. I mean, people literally were tripping over one another to spend an extra $100,000 more on their properties. It was quite crazy. Hey, Mariana, Texas says, I can't wait to come to New York in April. Can't wait for your arrival. That'll be great. It's usually a hit or miss in April with the weather in New York. It could either be really nice, like really, really nice, or it could be raining and sort of dark and gray every day. So hopefully it'll be nice. Hopefully we'll have a very mild winter and it won't last very long. So I think the NYPD is already starting to close off the running route for the New York City Marathon, which is good. Hey, Combat Jones says, I go on Street Easy daily and see 5% price drops or more. Yeah, I mean, you know, I'll also say this. If you're looking at new development, you usually can negotiate a little bit more with new dev than on resales, particularly in this type of market, right? Because you kind of got to know who you're going up against. And there's a lot of developers that are answering to their investors, and their investors are getting a little bit squeamish, right? As everybody is in this market. Developers or a sponsor, generally speaking, has to answer to investors. And they're like, you know, you promised us you would sell out this building in 40 months, and we're only 50% sold, and transaction volumes or foot traffic at open houses have really declined. So sponsors, generally speaking, are very eager to move product, and they have the ability to be a little bit more flexible on price. They could do rate buy downs, they could slash prices. You know, you can get more aggressive, in my opinion, in this market, as we walk past the Mandarin Oriental Hotel, which is beautiful, negotiating on new dev than you can on resales. Because at least what we're seeing in New York City, or at least what I'm seeing in New York City with resales, is there's not a lot of people that absolutely need to sell, like super motivated, right? So if you list your, $3 million apartment on the market for sale, and you just keep getting these lowball offers, well, if you really don't need to sell, like there's not like an earth-shaking reason to sell, you're just not even going to entertain these offers. But if you are a developer, right, and you're trying to sell all of these sponsored units, and you want to sell this building out as fast as possible, you can get a little bit more creative because you have that incentive to sell. Like, that's your job, right? Is to develop the building and then get a sellout and return value to your investors. Let's actually go over to the Trump Tower here. So keep that in mind if you are looking to buy in this market, and if you're looking at new product. If the list price says $3.5 million, I don't know, you'd be surprised. If you make an offer at 3, it may get done. Trust me. And this is from an inside look. I deal with developers every day. Deals will get done. Hey, Florida, thank you so much for your very generous $20 donation. So thanks for all the information and beautiful videos of New York City and Miami. Cheers. Thank you so much, Florida. Yeah, we just got back from Miami. I posted that downtown Miami walking tour 2 days ago, which was nice. Love downtown Miami. Love the state of Florida. And thank you so much for supporting. All right, let's wait for the traffic here, and then let's cross over to the Trump International Hotel and Tower. Hawaii says if I could start all over, I'd work for a developer or I would be one. It's a very, very hard and risky business because it's very capital intensive. And when you have a big move in the market like we've had now with interest rates going through the roof, depending on how you structured your deal, right? Do you have floating rate debt? Is your construction loan floating rate? A lot of developers could go bust and go bankrupt in a situation like this. So it's very, very stressful. And that's why on one hand, you have a lot of people saying, oh, these greedy real estate developers, they make so much money and, they price this all out because they're not building, affordable homes. You don't see the behind the scenes of what some of these developers have to go through. I mean, the risk is crazy. You have to have an iron stomach to be a real estate developer, particularly in New York City. It is not easy, but it's a fascinating business. So Hawaii, I agree. It's an amazing business. You know what, Hawaii, I want to send you a book. If you DM me on Twitter or IG, I want to send you a really good book that you would enjoy like crazy. The book is written by Catherine Clark. Now, Catherine Clark is one of the most well-renowned real estate journalists in the world. She works for the Wall Street Journal, and she reports on mainly ultra-luxury, high-end real estate. And she just wrote a book, and the book is called Billionaires Row. And it details and outlines exactly how Billionaires Row on New York City, or in New York City, was constructed, from 157 to 220 Central Park South, to 432 Park Avenue, to the Steinway Tower. Step by step, all the developers, all the stories. It's an amazing book. So if you're looking for like a Christmas gift, a really good stocking stuffer for your family, your friends, or your colleagues, co-workers, clients, I would recommend that book. It's called Billionaires Row by Catherine Clark, and it is an amazing story. An amazing, amazing story. So here we are right outside the Trump International Hotel and Tower. You're going to notice 3 distinct doors. The first door is the residences, where you can see the lobby right here. The middle door is the hotel, and the one all the way on the end is a Michelin star restaurant. Really nice building. I actually like this building maybe a little bit better than some of the ones on Billionaires Row, because if you have a unit on a very high floor, not only do you have unobstructed views of Central Park, but you have unobstructed views of every single building on Billionaires Row. If you live on Billionaires Row, you don't have views of Billionaires Row, right? Particularly if you're at the top of the top. But you have a really, I would say, unique type view from that building. And this is 15 Central Park West, one of the most exclusive addresses in the world. You could see all the barricades getting set up for the marathon. Hey, Stephanie R., take care. Enjoy your night, and thank you for popping in. It's always a pleasure to see you. Hey, Mark is joining us. What's up, Mark? Good to see you.
I had to carry that shit up.
Hey, Jeff in Southern Tier, New York. Jeff, I went to Wegmans today for the first time in Manhattan. For the first time ever in Manhattan. Fantastic. It was great. It was good. A little pricey, though. A little pricey. The prepared food was really good. Maybe tomorrow, depending on if I can get down there, I'll have to try the coffee. Because supposedly the coffee is really good at Wegmans. Dan Sangs, Tom, have you ever read the book The Art of War? I have. It is very good. Very, very good. You know, Dan, you just reminded me. You just reminded me. I want to share an amazing podcast with all of you. And Bill McDermott, okay? Bill McDermott, in my opinion, is one of the greatest tech CEOs of all time. He started off at SAP, right? He built that business into a massive behemoth, right? SAP, one of the most successful tech software companies ever. Then he left to be CEO and chairman of ServiceNow. ServiceNow trades under the ticker symbol NOW. Amazing, amazing CEO. He's from Long Island, right? He's from Amityville. And this guy is just like an all-around amazing businessman and entrepreneur. His story is incredible. We talk about him all the time in the live stream. And he was just on the David Rubenstein podcast. So I forgot to program it into the Nightbot. But if you just go on YouTube, right, pop on another window or a page, a browser, and you just type in ServiceNow CEO Bill McDermott, the interview is going to pop up. It's like a 30-minute interview. That is a required listen for anybody interested in business, particularly if you work in tech, right? If you sell software, if you sell in the telecommunications business, that is a requirement. And as I was, going through my career in tech and telecom sales, I would consume and devour everything Bill McDermott did, and he is just an unbelievable CEO. So you gotta listen to that interview. It just came out 2 days ago, and I think the podcast only has like 6,000 views. The thing should have like 6 million, like 60 million. So check it out. Let me know what you guys think. Bill McDermott, the CEO of ServiceNow, just an amazing guy, an unbelievable story, and unfortunately, he had this crazy freak accident. On Christmas Eve, he was at his brother's house, I think in Port Jeff on Long Island, and he was holding a glass, like a big glass of water, and he slips down the stairs, and some freak thing happened where he lands on the glass, and his glass cuts his eyeball in half, and he loses his eye. So you'll always notice in the interviews that he does on CNBC, Bloomberg, any public appearance, he'll wear those glasses, right? Those iconic glasses that he always wears, and that's from that horrible accident that he went through a couple of years ago. So, I mean, he just goes into everything about how to overcome and persevere through adversity. It's just an amazing, amazing podcast. So check it out. I was so impressed. I sent it, when I finished the podcast, it was in my office today, I sent it to like 5 of my core people, that I respect a lot. I'm like, you guys gotta watch this. All right, let's head back downtown. I just wanted to do a quick walk around the International Hotel and Tower. Wow, Juan Fernandez. I didn't know that actually, Juan. I didn't know that Michael Burry lost his eye to cancer. That's horrible. Jeez. And sometimes you just got to be thankful, count your blessings. Oh, the podcast was Dave Rubenstein podcast. The private equity, one of the most successful names in private equity in the world. I should have programmed it into the Nightbot, but apologies. All right, let's head down Broadway or 8th Avenue. We'll scope out the scene. But you guys know me. Usually I do not like to walk down 8th Avenue, but I know storm riders to stay away from 8th. Captain Coomer is the way the news talks about New York City. Makes it seem like people are getting murdered in the streets. Yeah, well, that's what I like to call sensationalism, right? And that's why I really do believe, and I do believe this in my core, that mainstream media channels like Fox News and CNN, they've lost so much credibility. The New York Times, the New York Times used to be like, whoa, you read the New York Times, you must be a super sharp person. But now, if you're caught reading the New York Times, it's like embarrassing. Like, I would be embarrassed walking around with the New York Times in my hand. I'd be like, oh my God, this guy reads the Times? Like, oof, embarrassing. It's the same thing. Oh, you watch Fox News? Oh my God, this guy's a kook. Same thing with CNN. They've lost so much credibility and they've been so dishonest with the American people. It's so sick. I'm actually getting a little bit nauseous now just thinking about it. But I really do believe we're gonna have a shift in media narratives where you're gonna have a huge rise in independent media, where these independent journalists that work at CNN, that work at Fox News, that are so fed up with getting paid the basic salary to promote a narrative, they're going to be like, look, I have the journalistic integrity and the skills to write my own stories, right, to produce my own content, and you're going to have hundreds of independent media companies from top talent at all these networks, and even some from people who've never worked in traditional journalism, and that's going to be the news. And I think that's going to be a more credible way or a more credible distribution medium for news, in my opinion. Because since 2016, news organizations have just totally lost all credibility. Just like so bad. Particularly Fox News and particularly CNN. Like, it's so egregious. So I do believe the top talented people that don't want to be told what to say anymore, they're just going to say, you know what? I'm going to code my own website, I'm going to have my own distribution medium, and I'm going to do all of my research myself and put it out in the public. And I think they're going to do really well. I think these independent journalists will do really, really, really well. On both sides of the aisle, right? We've seen this time and time again. We've seen big journalists get fired from Fox News. We've seen big journalists get fired from CNN. And I think they are much, much better off. I'll give you two main examples. Tucker Carlson was fired from Fox News. I think he's going to do so much better on his own. He's going to be so much more successful on his own. Number 2, Dom Lemon. Dom Lemon was fired from CNN, and he is going to be so much more successful on his own. Those two, and those are just 2 small examples, right? I can't do 8th. I can't do it. We'll go into the city a little bit more. I just can't do 8th Avenue tonight. But those are just 2 examples of 2 individuals, Dom Lemon and Tucker Carlson. They will go on to do their own thing, and I think students, right, in college right now are sort of noticing this trend, and they're saying, I don't want to work at the New York Times. I don't want to work at Fox News. I don't want to work at CNN anymore. I want to build my own infrastructure. I want to use my own talents to go direct to consumer. And they're going to grow extremely big businesses, and their businesses are going to grow in direct correlation with the honesty and their integrity, right? Because you're not backed by a big corporation. When you're backed by a big corporation, if you report fake news and you say something that's dishonest, well, you have a big multi-billion-dollar conglomerate to fall back on. When you're an independent person, your word is your credibility. And if you lose credibility, you're out of business. So I'm actually really optimistic. I'm really, really optimistic about the future of independent entrepreneurialism journalism. And I think it's going to be more educational too. So I don't know, any disagreements or agreements with that? I mean, that's just sort of my take, but I have an open mind to hearing what you all think. But I personally believe that, going direct to consumer with your own reporting, I think is going to be better. So, the Wizard says independent media has no oversight and therefore is incredible as well. We're lazy. We need to do our own studies to know the truth instead of listening to other talking heads. That's an interesting thought, the Wizard, actually. That's actually an interesting thought. I actually don't entirely disagree with that at all. It's like trust but verify, in a sense, what you're saying, right? You're saying the American people, and not only the American people, like the world, we've gotten lazy. I think I agree with that. We've gotten lazy to the point where we'll read something, and just because it's in text, we think it's true without any additional verification. I actually agree with that. Randy says, disagree but enjoyed the rant, which is a perspective I haven't heard before. Yeah, I mean, maybe I'm wrong, but I just think with some of the stuff that has come out that was reported as fact by mainstream news channels, which is now proven to be totally fake, I feel like if we only have 2 monopolies, right, and the monopolies now in this country is Fox News and CNN, and those are the only distribution mediums, so they're essentially being used as a propaganda distribution medium from either side of the political aisle, right? So when you're listening to either or, you're not going to get the truth. You're just going to get what fits the particular narrative to whatever political party. That's sort of the way I think about it. So to have a third option, to go to direct to consumer through individual outlets, I think provides at least like a check to that system, maybe. I don't know. Bree says, I don't know if it's us being lazy or just because it's being forced on us. Yeah, I mean, I really don't know, but disruption is good. That means we're going to get better product, better services. It's going to be good. Hey, thank you so much for your donation. I appreciate it very much. All right, let me try to catch up on some of the comments. NMB 45 totally agree.
I'm going to try to find the comments who disagree. Mike C says a point/counterpoint style show with Dom Lemon and Tucker Carlson would be a must-see on TV. Yeah, if they had like their own sort of podcast and things like that. Yeah, I mean, I'm just sort of skimming through the comments. Sorry about that. But look, the more options consumers have, the better, I think. When you only have 2 options, that's just like a monopoly. So when you have more resources to go from and more perspectives, I think the better. I think the better. Like what I try to do, and I'm a conservative in nature, right? We really don't talk politics on this channel, but that is really where my politics sway. I'm more on the conservative side, but I make sure I pick out people that I respect from other sides of the spectrum, so to speak. So for example, I support independent journalists trying to be entrepreneurial on their own platforms, right? So, like a David Pakman, for example. Now, he is left-leaning, right? I don't necessarily agree with a lot of the stuff he says, but I think he's an honest person, and that is the big difference, right? I will listen to you, and I will consume your content and support independent journalists and creators, regardless of political opinion, if I think they're honest people. That's the problem with mainstream media in America. Americans don't trust the big talking heads behind the big bureaucracies of, CNN and Fox News. But an independent reporter that is giving their take on something, that goes out into the field and captures video evidence and gives their spin on things, okay, I may not agree with your take, but I don't think you're purposely trying to deceive me. And that is the main point. You know what I mean? That's the main thing. And I think, entrepreneurs are really changing that game in media right now on both sides of the political aisle, which I think is really good. Not to generalize, but the last thing I'll say is, my theory on why the country is so polarized is not necessarily just because we differ on political opinion, but the medium distributions are coming from people we don't trust. So when we hear those opinions from people we don't trust, that gets us all riled up. But if you can look at somebody that's like, okay, this guy is a sensible guy, he's saying what he thinks, and he's not trying to deceive me, well, then now I can see him as a human, and I respect the opinion, and maybe we could find some common ground. But if it comes from a big machine, I don't know, it just doesn't work. All right, this is the main Hilton hotel here. This is the flagship. Looks like it's fully booked out for the marathon too. Hey, El Toro, thank you so much for your generous $5 donation. It says, do you believe the news about the future foretold in the book of Revelation? Scary that the Almighty, the Alpha and the Omega, inspired those writings. El Toro, I really do appreciate your donation, but just being totally honest, I have no idea what you just said. So I don't know if I can even comment on it. I don't even know what that is. Respectfully, I don't know. I'll try to read it again. Yeah, I'm sorry, man. I don't know, but I do appreciate you supporting the channel. I appreciate the donation, but I don't know what that is, to be honest. Hey, Hal T, what's up? Brian says it's human nature to fall into duopolies. It happens in business and it's happening in news as well. Hey, Ken Brockton says, hey Tom, the problem is news has become about the clicks. The market predominantly wants a mixture of sensationalism and bias confirmation. I think that's the comment of the night from Ken Brockton. I think you've nailed it. That's so true. Yeah, I mean, we'll see. That's a really good point. Because at the end of the day, what's the narrative, right? And you could say follow the money. We always talk about that, right? Follow the money, follow the money, follow the money. And in order for these big media companies to stay in business, guess what? They need to sell advertising. How can they sell more advertising? By getting more clicks. How can they get more clicks? By sensationalizing the news and getting everybody all riled up. So, I mean, Ken Brockton, you're not wrong. I think that's something we fundamentally need to change. But you know what I've noticed? And I don't know. I've noticed that some of the more independent people don't do as much of the sensationalism as the CNNs or the Fox News does. I don't know. But you're right, it's all about copywriting. What can drive clicks? What can get the most engagement? And unfortunately, fear sells, right? Fear sells. That's why the vast majority of people don't make money in the investment business, is because they flip out and freak out when anything bad happens, right? They're not composed and they don't think critically. And it makes sense, right? Look at the content on YouTube that revolves around financial content. The videos that get the most views as it relates to the financial markets are the ones that are only talking about fear porn. It's going to be the next 2008, and the thumbnail is like this guy with his mouth open, right? And for some reason, the thumbnails are always these people with their mouths open. It's like, just close your mouth. I don't understand why it's open. But anyway, yeah, I mean, you're right. They'll be like, it's going to be worse than 2008. It's going to be worse than the Great Depression. It's you got to buy canned food now. It's going to be so bad. And that, it's stoking fear. It's sensationalism. That's what drives clicks. So I think Ken Brockton, you're right. I think you're absolutely right. All right, so we are walking past UBS, and we are about to come up on Radio City Music Hall. We'll check out the ice skating rink as we approach 51st Street, Rockefeller Center, and Radio City.
Oh, y'all going up, right? Yeah. Go ahead, this one. All right, Chad.
All right, I think we could cross now. This is always one of my favorite shots of the city, looking downtown right in front of Radio City. It's such an iconic shot right here. All right, so we are going to make a left on West 50th Street. You can see here they're doing the advertisements for the Christmas Spectacular at Radio City Music Hall. All right, let's take a guess in the chat. Do we think the ice skating rink at Rockefeller Center is going to be packed tonight, or do you think it's going to be dead? What do you think? I think it may be dead, actually, because of the marathon. Hey, Brian says, I'm curious, are your financial newsletters related to your real estate? Hold on. Real estate job. Hold on, the chat's moving too fast. I can't even read your comment. Or a separate interest. Well, check it out. You could read it for free. If you scan the QR code on the chat or on the screen, you could read it for free. You don't even have to sign up if you don't want to. But the newsletter is sent out every other Thursday after the market closes. And I'm sort of writing it in this order. I want to cover global macro, capital markets, so equities, global equities, fixed income, and then real estate, both commercial and residential. Because when you're thinking about, and at least this is how I was taught, right? When you're thinking about investing in anything, you need to first understand what is the environment in which you're operating in, right? What environment are you operating in? Are you in an environment of QE, QT? What are other central banks doing? So you need to sort of be in tune with a top-down approach, so to speak. Top-down, bottom-up, systematic process to investing. That's how I was taught. So that is sort of how I try to write the newsletter. You know, what are the main things going on? Is the Fed easing? Is the Fed tightening? What are other central banks doing? What are the notable earnings reports that have come out? And how are those results, or what we're seeing in those reports, going to impact equities? How are they going to impact real estate, particularly commercial, CRE, office, residential, and whatnot? That is sort of the approach I try to take with it. So as you read through it, or if you listen to it, that is how I try to organize it. I don't give out stock tips. I don't give out picks. If you're looking for that, that is not that. That provides no value, right? What I'm trying to do is I'm essentially trying to disrupt traditional equity research as we try to cross over to Rockefeller Center. Reading a traditional equity research piece is so mind-numbingly boring, and I've read thousands in my life. I want it to be digestible, easy to read, Ike says, do you skate, Tom? I don't ice skate, I skateboard though. Now speaking of Taylor Swift, I think she just became a billionaire about a week ago. I think her concert sales were the highest ever. Some of the highest grossing sales for her tour in history. I think it grossed over $1 billion in just revenue actually, which is crazy to think about. It's incredible. All right, so it looks like they are just putting the holiday stuff on Saks Fifth Avenue. What does it say? It says Christian Dior and Saks. I don't think they've finished it yet, but they're kind of putting the lights on around it. I know, Hawaii says Taylor Swift is on fire. It's incredible, you know, the massive brand she has built. It's honestly like insane to even think about. He says zodiac signs don't feel really Christmassy. Not really, right? I kind of liked it last year a little bit better. Now I don't know what they're doing. Maybe they'll take it down and put it up later, but I don't know. I believe they just announced where they're going to get the Rockefeller Center Christmas tree from. Oh yeah, that's right, Matthew M. We have daylight savings time, right? That means it's going to be dark, extremely, extremely dark at like 5 o'clock now. That's one thing I'm not looking forward to be honest. I'm not looking forward to waking up, it's dark, you get out of the office, it's extremely dark at like 5 o'clock. Not looking forward to that, guys. But if you're enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. We try to do these streams usually every day, starting at 8:30. Well, let's take a walk down Fifth Avenue. We'll actually be able to see a little bit of the 270 Park Avenue development, which is almost topped out actually. 270 Park is almost totally topped out now. Tony says somewhere in upstate New York, forgot the name of the place. Yeah, Jeff in Southern Tier, New York. I think it is from your town, I believe, where the Christmas tree is from. Anybody know the name of the town? Now, Rockefeller Center Christmas tree is very iconic, as we all know, right? It's one of the best things about the city during the holidays, but there is something better, and I think way better. And that is the Christmas tree that they put right outside of the New York Stock Exchange on Broad Street. And that is by far, in my opinion, the best Christmas tree in the city. It's amazing. I'll take you guys there when they put it up. But the building we're looking at right now is 270 Park Avenue. This is the brand new Class A office tower for JP Morgan Chase and Jamie Dimon. Now, coming very, very soon, Ken Griffin and Citadel will be building their very own office tower on Park Avenue, in addition to Brickell Avenue in Brickell, Miami, Florida. So there's going to be a lot of new product coming onto the market. I don't know. I think it's... I was listening to an interview with the CFO of Blackstone. And one of the things he said in the interview is that when you start to see cranes everywhere, you should, be getting a little bit worried and pulling back just a little bit. And I see cranes all over New York City, and I see cranes all over Miami. And it seems as if we're gonna have so much new product coming on the market, both in commercial and residential, just as the market is slowing down and grinding to a halt. So I don't know. Let's check it out. Let's make this left, and we will take a walk around the perimeter of the construction site. I know Juan Hernandez's dude, Miami has cranes everywhere. I counted 15 the other day just in the health district alone. Yeah, and this usually happens in every cycle, right? A lot of the developers get in a little bit over their skis, there's overbuilding, and then you have prices to come down a little bit. Hey, Terry Wells' thoughts on the $1.8 billion judgment against the realtor firms. Oh, was that the National Association of Realtors? I saw that. Now, I haven't really been following it too much, but in essence, is this like an antitrust lawsuit? Because the way I view it is the following, at least in the New York market. The commissions are negotiated between the seller and the real estate broker, right? So if I come to you and I want to sell your house, before we list your home, we negotiate on the commission percentage. I guess what is alleged is that the National Association was colluding to keep commission percentages elevated, right? Is that the point of the case? So to say, all of these big, National Association of Realtors and the like were colluding, right, or conspiring together to say, hey, let's make an industry standard not to have commissions drop below a certain percentage. I don't know if that's what was going on, right? I'm just from my understanding of the case, I guess that is what a lot of people complain about, but I don't know. I mean, in my experience, the seller negotiates with the broker for what the commission percentage is going to be. And there's no set percentage. You could sell your own house if you want. You could list your own house and do seller as sold by owner. So I don't know. I don't really know what's going on there. But I will say this. I think the real estate business is ripe for disruption. And that's one of the reasons why I've entered the business. So stay tuned. I can't say what I'm working on, but I think it's going to be massive. I think it could be a very big company. Now, this is 270 Park Avenue here, East 47th Street and Madison. I think it looks pretty good, at least from this side. Terry Wells says, yes, 3 firms involved, Keller Williams being one. Dan Zhang says, Tom, have you ever gotten into an argument during the negotiation process with another agent? No, not really. Not really. Now, thankfully, right, and lucky for me, I am on one of the top teams in the nation. And in the Manhattan market, there's a handful of very, very good brokers that have their hand in pretty much all the big deals, right? There's about like 20 of them. And at that level of the market, everybody is very, very professional and does things by the book, right? Because they're dealing with the biggest deals. They're dealing with the best and biggest developers. They're on the hottest product. So you can't really do anything that's going to tarnish your name, or you're going to get kicked off a lot of these big deals. Where I've heard where there's a lot of shadiness going on is part-time agents that have never sold real estate, have never bought real estate in their life, and who are not educated. They get into the market because the barrier to entry in the real estate sales business is so low, and they screw up a lot of deals, and they advise their clients in the most egregious manner possible, right? Because if you think about it, oh my God, look at all the mopeds. I think this is one of the big migrant facilities at the old Roosevelt Hotel. But anyway, I mean, if you think about, wanting to become a real estate agent, really the only thing you need to do is take a test. I mean, when I did it, I took the course, which is a 72-hour course, and then you take a test, and then boom, you can be licensed. So I think what I would agree with and vote for is the following. You need systematic, don't whistle at me. You need systematic training programs, just like anything, right? When I was in tech sales and when I got hired by a big company, I went into a training program, 6 months on campus. I worked with a team, I learned the business. Unfortunately, it's not like that in the, hold on, somebody cross. Unfortunately, it's not like that in the real estate sales business. So I think there should be, you need to have more education. There needs to be more education, there should be more barrier to entry. That's really the only thing I could say. But luckily enough, with the people I interact with on a day-to-day basis, these are industry veterans that have sold multiple billions of dollars worth of real estate and also have developed billions of dollars worth of real estate. So, I haven't really experienced like the crazy horror stories that a lot of people may have experienced, I guess. Cape Cod says, how come no whistling? I don't like when people like whistle at me to get attention. I'm not a dog. I'm not your pet. Um, 456 says New York City real estate industry is a pyramid scheme. Changed my mind. What else we got? Yeah, Frederick said that too. I know, it's just like, look, anything, it's the Pareto principle. And in every single business, in every single industry, you have the Pareto principle, right? 20% of the people do 80% of the deals. Now, some people argue, right? I think the main thing about the commissions is people will argue, they shouldn't be so high. Okay, I agree, but you negotiate that with your broker. I mean, that's what you negotiate. Now, because they say, the fees are so high for the little work you do. If the government got involved in fixing prices, it's just going to cascade to other industries. Right? Think about investment banking. I'm sure we have some investment bankers here in the chat. If you work on a big M&A deal, right, you charge advisory fees. These fees are crazy, billions and billions and billions of dollars. Right? Look at the equity underwriting fees when you take a company public. These fees are nuts. So, should that be a fixed fee or a fixed price, or should the free market set the price? I think it should be the free market. However, in markets that are very, very small, and this is what I do agree with and this is what I see, and a company that I'm building, I can't really say anything yet, that I think is going to totally revolutionize the real estate industry, essentially digitizes sales of apartments, houses, and all that. The only sort of hurdle we have to go through is the legal standpoint. Because selling a property, particularly in New York, the legal process is just ridiculous, dealing with lawyers and all that. But In some small towns in America, right, or a small market, you may have only a handful of agents to be able to sell your house. So there could be some colluding there to say, no, we don't want the commissions to be below 6%. And that does happen, right? To say it doesn't happen, it would just be ignorant. Of course it happens. So again, there needs to be investigations into those instances to make sure that customers and consumers are getting the best experience possible. And I totally agree with that. But look, I'll sort of close with this. The real estate business, right, if I look at, and this is from my experience working in tech, it is an industry that is very, very ripe for disruption. Very, very ripe for disruption. And I think that with the appropriate partners, there could be a very, very big company, very, very big business built in digitizing the online transaction of real estate. Now, this doesn't mean get rid of real estate agents. It just means that I believe, in my opinion, that software could fundamentally help and expedite the buying and selling experience for consumers. It will reduce commissions, it will increase deal transactions, which will actually result in more commission income, but lower commissions paid by sellers. So just as any industry is ripe for disruption, I think the real estate business is, and I think down the line, maybe in the next 10 to 20 years, you will see online digital exchanges that are, and there's a lot that goes into it, but I think you'll see an online full service digital exchange for the buying and selling of real estate. That's what I believe. All right, everybody. I'm gonna get something to eat. I didn't eat dinner tonight, so look, I thought this was a really fun stream. We had a lot of good conversation, a lot of good thoughts from you guys in the chat, and I want to wish you all a very, very happy weekend. If you enjoyed the stream, feel free to leave a like on the video, click subscribe if you're new. If you want to sign up for our free financial newsletter that is sent every other Thursday, and if you want to receive it this Thursday, feel free to scan the QR code and punch in your email, and every other Thursday you will receive all of our equity research for free. It's a great free way to support the stream, and it helps me out a lot. So Yogi, thank you so much for joining us. Florida, I appreciate it. Hawaii, thank you for joining. NNB45, Goldie, UniJ23, Hang with Mark Mom, all of our great moderators, Bree Grams, David, Daniel, Fred X, good to see you back. Steph UF. Who else we got? Joseph Hardaway, Western Mass Dave, Colton Manning, Jeff in Southern Tier, New York. Guys, we'll see you back here tomorrow in New York City. Good luck to all of our viewers who are running the marathon. And we will see you right back here live in New York City tomorrow. Take care.